Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity Mate.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going?
I'm good, Bryce. Pumped for this show.
Yep.
You know it's going to be a loose one when you really hit the mates.
Bit of fun and games in this one.
Speaking of fun and games, we're going to be doing a bit of live fun and games for the first time in a while.
And no, it's not an Equity Mates talent show.
No, the Equity Mates quiz show.
No new formats. But you're right, Ren. We are excited to announce that we will be doing a live show in Sydney. And apologies to, I guess, everyone who are in many other cities around Australia. We hear your feedback that you would like us to get around, and we will. We're just going to be kicking this off here in Sydney. What we're going to be doing is an industry deep dive, an industry night where we're going to be exploring the beverages and alcohol industry with a few key experts, both on the investing side and on, I guess, the producing side as well. So we're keen. It's going to be an awesome night. It will be live streamed. Tickets will be available. Check out our social channels, our website, and also show notes for more information on all of that. April 29th, we are super pumped.
Yeah, can't wait to get back to doing live shows. On the point of people in other states wanting us to do live shows, one, thank you. It's very nice that you want us to do a live show in your city. Two, and there's businesses out there that want to fund the Equity Mates Australian tour. That's probably a key prerequisite to getting this off the ground. So slide into our team.
But yes.
Well, I
know
mean,
what you mean. Yeah. It'll help.
It'll open a lot of doors. Look, it wouldn't shut any doors.
Yes.
So hit us up, slide into our DMs, email at us at contact@equitymates.com. We're very happy to partner.
We'll come to any city in Australia if a local business wants to
that's
support.
A big call.
Yeah, I'm putting it out there. Any city in Australia.
If you fund all the travel and Bryce's incredibly detailed rider, then yeah, any city in Australia, we put it out there. No takebacks.
We'll do it. But look, we're kicking off in Sydney late April. As I said, tickets will be available for those that want to come and join us live, but we will be also live streaming it and recording it for those that want to join on the night but are unable to make it. So keep your eyes peeled for more information. But Ren, today we're going to have a bit of fun and to talk about asset bubbles.
Yeah, well, the state of the market is interesting at the moment, I think. And we speak about a lot of asset classes in isolation, but you put it together and it paints a pretty interesting picture. Everything's hitting all-time highs.
Yeah. Look, you pick an asset and it's likely to have hit an all-time high within the last few months, potentially. The time scale, obviously not everything is at all-time highs right now.
No.
But I think the key message or key takeaway is that it's not far off.
Well, yeah, and I mean, what we're going to try and do in this episode is talk about, just put the narrative together around how everything's hitting all-time highs, and then talk about some of the reasons why, what it might mean, how we should approach it as investors. But let's start with the long and the short of it. What's going on in markets?
They're at all-time highs. They just keep going up.
But I mean, specifically, the S&P 500 is at an all-time high.
Yep.
The NASDAQ hit an all-time high in mid-February.
Yes.
It's softened a little bit recently. The ASX 200 is 5% off its all-time high pre-COVID, but it's running in that direction quite hard.
Yes.
Bond yields were at an all-time low, which means that the face value of the bonds was at an all-time high.
Yes.
That's softened a little bit, but still, like, pretty recently. Australian property, like, you can hear that running, and like that's hitting all-time highs everywhere. It's
everywhere. New Zealand, absolutely firing.
Yeah,
firing.
The Canadian Economist boys sent us a chart that we put up on our Instagram and Facebook recently was it the Auckland property market?
I think it was just New Zealand in general, with some specific examples of places in New Zealand up 40-45%. And of course, you could draw parallels to places here in Australia, Byron Bay up 40% last year or over the last few months. But yeah, look, it's just happening everywhere at the moment.
Even things like gold hit an all-time high in 2020. It is just an incredible moment in markets where everything is just running.
Yeah. You can't blame people who have started their investing journey within the last few years for getting on the meme thought that stonks only go up.
Yeah, stonks only go up. Like, just invest in anything. Invest in bankrupt car rental places like Hertz. Invest in brick and mortar games retailers that are being disrupted like GameStop. Things are just running. It's an incredible time in markets. But I think the thing that has really caught my interest is it's not just these traditional investing asset classes that are hitting all-time highs. Basically, anything that can be said to have value is hitting all-time highs.
Yes. Let's start with, obviously, Bitcoin.
Yeah, well, we've just come off crypto week. We did a whole week where we tried not to talk about the price of crypto. We tried to talk about what it is, the use cases, what it means. I think we got through the week without mentioning price. I'm not gonna put my hand on my heart and say that because we did 4 episodes.
May have slipped in the interviews.
Yeah. Do your own research. Go listen to those episodes. And if you've already listened to them, listen to them again. We love every download we get. But yeah, now we'll talk about it. Bitcoin crashed through 60K USD. It's now in the high 50s. Probably by the time we release this episode, it will have another leg up.
Yeah, at time of recording, it's not quite all-time highs, but it keeps pushing those ceilings and breaking through.
Yeah, and like just to put it in context, it's almost 3 times as valuable as it was in the 2017 bubble.
Yeah.
The 2017 bubble, it didn't quite hit $20,000 US, and it crashed through 60,000 earlier this month.
Yeah.
Or March.
Yeah. Unbelievable.
Yeah.
Unbelievable run.
And it's not just Bitcoin, but like so many of the cryptos are hitting all-time highs.
Yeah.
Ethereum hit an all-time high earlier this year. Like, I don't really look at a lot of the
Dogecoin.
altcoin, but I'm sure, there's just everything is running.
But then you start getting into the, I guess, more niche investable in inverted commas assets. Speculatable. So if you take a look at baseball cards, Ren, something that you would have thought by now would have fallen away a little bit, but look, smashing through all-time highs.
You know, Gary V?
Yeah.
The like fast-talking entrepreneur guy in the States.
You do you.
So he's like super into baseball cards at the moment, and I had no idea people even considered these an investable asset. But he's all in on them, and the money pumping into baseball cards of all things is crazy. January 2021, there was a record sale for a Mickey Mantle baseball card. I was about to say guess how much, but the notes are in front of you as well.
I'm going to guess within the range of $5.2 million.
$5.2 million. Like, that is unbelievable.
Yeah. Well, anyway, I think we'll discuss why in a second, but let's continue moving through some of the crazy assets. You can't go past NFTs.
Yes.
Hot right now. We did speak about them in Crypto Week. Non-fungible tokens, essentially a way that you can sell digital assets.
For people that don't understand what an NFT is, I mean, we've done Crypto Week, but we didn't go deep on it. I saw a tweet that was like NFTs explained, and it just had 2 boxes. One had JPEG written on it, and the other had NFT, and the NFT had a little verified tick. Like, that was NFTs explained.
That's great.
Yeah, I thought it summed it up quite well.
Yeah, they can assign who that JPEG belongs to.
Yeah.
So look, NFT just breaking record after record, and if you want to jump on, there's a website called OpenSeas at the moment, which is hosting a lot of these auctions, and the Bryson DeChambos of the world who have
Bryce may have put some bids on Bryson DeChambeau's trading card NFTs.
Yeah. But look, one recently got sold by a crypto artist Beeple, and it was $69 million.
$69 million for a piece of crypto art sold at Christie's, which is like one of the biggest auction houses in the world.
Respect to Christie's for getting on this quickly.
Oh, mate, they just love a commission.
But respect for them getting on it and adapting to where the market is going. Good on your Christie's. Can you invest in Christie's? I'm not sure, but
maybe.
But let's continue on that theme. NBA Top Shot highlights.
Yeah, have you heard about these?
Yeah. Going crazy.
Do you want to explain them for people who haven't?
Or they're hot shot highlights sold as they're sold as NFTs, aren't they?
They're sold as NFTs.
Yeah, so they take clips of, I guess, some of the more famous basketball players who are taking top shots and sell them. Long 3-pointers.
Hey, that was a top shot, dude. Yeah. They're like digital trading cards, I guess. They're the highlights. Yeah.
Highlight reels of some of the best players, NBA players.
Yeah, and they're sold as an NFT, and so then you're like the verified owner of this highlight, which I would love to know what the legalities of that are, because it's not like you can then charge the ESPN or
this is what I
Fox
don't
Sports
understand.
licensing fee every time they play that highlight. So I don't think you're really like the owner from like an IP perspective, but maybe I'm wrong.
Maybe, yeah.
NBA Top Shots, slide into our DMs. We might do Equity Mates Top Shots.
It doesn't make sense that you wouldn't be. Because from my understanding was that, anyway, probably need to do a bit more DD on it, because it doesn't make sense that you wouldn't be. Because in the same breath, people are like, oh, you can print the Mona Lisa, but it's not like you're owning the real thing. But
I hate that argument so much, because it's not the same. You can print a reproduction of the Mona Lisa, but it's not like a painted artwork. Whereas I can get a digital file that is exactly the same as a highlight. I'm just not the verified owner of it. You know what I mean?
Yeah, I get what you mean, but you could...
And then you say you could go to a forgery expert and get them to recreate the Mona Lisa. And there I'm a bit more like, okay...
Yeah. I mean, I think it conceptually makes sense.
I don't, but anyway.
Yeah, fair.
But look, just because I don't understand something doesn't mean it does or doesn't make sense.
Sneakers, Ren. Sneakers.
Hold on. We didn't say. So Top Shots have sold over 250 million in Aussie dollars since launching 6 months ago.
Huge revenue stream.
Huge. Will other sports leagues follow, like AFL Top Shots?
You'd hope. Well, they'd be silly not to.
Yeah. I don't know if I'd hope so.
Yeah.
I actually think we should do Equity Mates Top Shots, best moments from the podcast.
Sure.
First Specky Hotline, the launch of Comedian v Economist, the launch of You're in Good Company, Meet Pay Love's best episode.
Or we should do some, content that is just for NFTs.
True.
Like NFT original content.
I've actually I've got a photo of Bryce from a photo shoot we did recently, and I could sell that as an NFT. Your model shot? Your
sure,
blue
let's
steel?
go. Throw it up. Anyway, let's move on.
If people want to see it, slide into his DMs.
Sneakers are also hitting all-time highs. It is now a $2 billion market in North America alone. Ren, absolutely smashing it out. We did a live show last year that looked at the sneaker market, and I was blown away by the trading that is going on there, the platforms that people are trading on now. It's just an entire world of its own. The Nike Air Jordan 1, the shoes that obviously MJ wore during his 85 exhibition.
I think
match.
it was the specific shoe that he wore. Yeah,
the actual shoe sold for a cool 615,000 US, and if you compare that to the 69 million,
I was just thinking that.
It's crazy. Here you've got Michael Jordan's shoe, not even hitting 1 million, but look, still 615,000.
Or if we get into the the relative economics of the speculative economy. That's going to be my thesis paper on that.
Sure.
10 pairs of Jordan sneakers equate to one Mickey Mantle baseball card.
Yeah.
Crazy.
Crazy. Art. Look, continuing to hit all-time highs.
Yes.
January 2021, Da Vinci artwork up for sale.
Yeah, Salvador Mundi. Do you know it? You're pretty
I
confident.
actually don't know it, Salvatore Mundi. But anyway, I do know the price that it sold for.
Yeah.
450 million.
Crazy.
450 million for a piece of art done by Da Vinci. Pretty unbelievable.
450 million, aka 90 Mickey Mantle baseball cards.
Yeah, I'd take the Da Vinci.
I would take the Da Vinci as well.
Yeah. Then we've got GIFs.
Hold on. Before you say what it is and the price, on screen right now, if you're watching on YouTube, we've got this GIF playing. For people listening on the podcast, it's like a digitally drawn cat with a rainbow flying out behind it.
Yeah.
People watching on YouTube, have a guess in your head about how much it sold for.
It sold for 300 Ethereum.
Which is
$624,000.
$624,000 for an NFT of a GIF of a cat with a rainbow.
Yeah.
Yeah.
Unbelievable what is going on here. But look, that's pretty much what is going on within the last sort of, year or so, and it's been pretty crazy.
Yeah, so I think let's pause there. What the hell's going on? Like this market is so hot. It feels like all these other like traditional asset classes, gold, equities, property, bonds, hit all-time highs, and money was just looking for places to go, and it went into baseball cards and gifts and sneakers.
Before we jump into what is going on, we will take a very short break to hear from our sponsors, and then we'll get stuck into it. So Ren, look, a lot of money out there, a lot of people looking for places to put their money. And before we jump into what is going on with these asset prices, Equity Mates are always looking for a bit of support. And if you want to...
Jeez, that's a segue.
That is a segue. If you're looking to support Equity Mates, we would really appreciate it. You can head to equitymates.com/support. And if you like what we're doing and value our content and would like to continue to, be part of the Equity Mates community as we grow, then we would certainly value you heading over to equitymates.com/support and giving whatever you can, or perhaps buying one of our NFTs that we get off the ground.
Or some merch eventually.
Awesome merch, yeah. Merch will come. Come.
So we've spoken about the unbelievable asset inflation, I guess.
Yeah.
We said at the beginning asset bubbles. I'm sure some of those are bubbles, but everything is hitting all-time highs, and that is unusual. What do we attribute it to?
There are three sort of key things for us that is going on at the moment that could be leading to this sort of, inflation in a lot of these assets. Let's start with money in the system. Ren, a lot of money that needs to go somewhere. Money is being printed at extraordinary rates at the moment by central banks. And this is having a flow-on effect around the world. On where people are deciding to put money.
Yeah, well, I mean, just before, like, people probably think here, like, there's so much money in the system, and like it sometimes is a bit confusing. But the Federal Reserve, they print a lot of money that's then used to buy like bonds and debt. To give you an idea of how much they pre-COVID in like 2019, they had about $4 trillion of debt on their balance sheet. They've printed money and bought debt and almost doubled that. They have about $7.6 trillion dollars on their balance sheet now, and that's just in terms of what the Fed balance sheet has, that's an extra $3.6 trillion that's been released into the economy, that's gone to banks, that's gone to companies selling bonds, that's gone to government to then fund different programs, and that money has to go somewhere. And if you're an investor or if you're an investment bank or if you're a company, like you don't want money sitting in cash. So you got to find somewhere to put it. Yeah. So the flow and effect of so much money in the system is the I word that has been thrown a lot around recently. We did on our Ausbiz show a couple of weeks ago, we were talking about how inflation, which is the I word, has hit its highest Google search or like Google trend since like 2004. Like there's a lot of chat about inflation in financial circles at the moment, which is a natural outcome of increasing the money supply so much. If inflation happens, you don't want to be holding cash. You don't want to be holding dollars, and you want to buy assets that will increase in price with inflation. And I think what we're seeing with a lot of these assets hitting all-time highs is that people want to own something that will hold its value and potentially increase in value. Like they don't want to be sitting in dollars.
Well, yeah, your traditional methods of fighting inflation are to buy real assets, housing,
infrastructure,
REITs, all those sorts of things.
Stocks with pricing power, companies with pricing power, all that stuff. Yeah.
What is, I guess, and potentially you could put, I guess, artwork and those sorts of things. That's, there's so much money out there now that people are turning to these sorts of assets
gold,
to hold value that is going to be able to, I guess, keep up with inflation.
But this is the thing, like no one's tested whether a Mickey Mantle baseball card holds value. Well, actually, maybe they've probably been around for a while. Like there's probably enough data that it has.
I feel like the big ones may have, but
but like no one's tested if an NFT holds its value.
No.
Or like the volatility. Sneakers, they probably haven't been around long enough. But I think the point is that there's just a heap of money in the system. The US Fed used to publish this chart. It's called the M2 money supply, and it's just basically like how much money's in the system. And they've stopped publishing it. They stopped publishing it at the start of this year or like February of this year. But you can just see from COVID, from like early March 2020, it's just, it's like a trend line up that then just goes vertical. And yet, money everywhere and not an asset to buy.
Well, there's more and more assets coming, but they're pushing more people up the risk curve. No, didn't work at all.
That's number one. Money printing leading to inflation, leading to like the devaluation of the dollar. You don't want to be sitting in currency, so people are flooding into whatever asset they can find. That's reason one. Reason two.
Interest rates.
Yes.
Investing is all about relative returns, and we know that interest rates around the world are continuing to push record lows. We speak about record highs. Well, interest rates are record lows. Some countries even in the negative regions for their interest rates. Now, of course, 20, 30 years ago when interest rates were in the 7s, 15%, whatever it may be, it made sense to hold a bit of cash and make a pretty decent return on having cash in the bank. With interest rates so low at the moment, two things are happening. A, it doesn't make sense to have cash sitting in a bank account because the returns on that are pretty negligible given the opportunity that you could put that money to work in other assets that are going to generate a greater return. But also secondly, low interest rates means that it is easier and cheaper to borrow money.
Yeah.
And we know that when people can borrow money and it's cheap to service, they're likely to leverage themselves and buy into assets, i.e. housing. So if you look at what's happening in Australia here, you look at what's happening in New Zealand, and I'm sure there are many examples around the world of, I know what's happening in America. There's a house price I guess, inflation period going on at the moment. And that is primarily driven by the fact that money is so cheap because interest rates are so low.
Yeah. I mean, we had Thomas from Comedian the Economist on our Ausbiz show, and his line was, when it comes to house prices, it's interest rates first, daylight second. And I mean, maybe we can expand his comment too. When it comes to any of these assets, it's interest rates first, daylight second.
Yeah, yeah. So there's money in the system. People are looking to do something with it. Money is cheap. It's not good in the bank.
Yeah.
So-
Just you said that investing is a relative game. Do you want to just explain that for people who may not get the concept?
I mean, if I'm getting, say, a luxurious 2% in my interest account and I'm getting an 8% return in the share market, that 6% outperformance or 6% difference is the return that you're looking for, or the relative return from where your money could be in either of those investment options. And then it comes down to inflation as well. So if the price or inflation is also 2% per year, you want to be outstripping inflation, because that means the value of your money isn't deteriorating year on year.
Yeah. And then your 2% in the bank has zero risk. It's insured by the government. So and then the 6% or the 8% you get in equities has a certain amount of risk. And then if that savings in the bank, you suddenly get 4%, then on a risk-adjusted basis, people might prefer that, or they might allocate more of their portfolio to that. When interest rates are so low, when bonds are yielding so low, when stocks are at all-time highs, people start looking at other asset classes because they think that, the return over the next 5 or 10 years isn't going to be that high, may not beat inflation, especially for the risk that isn't contained. And so they decide that Mickey Mantle baseball cards might have a better risk-adjusted return.
Yes. So, Ren, the third and final sort of reason that we consider this to be happening is the technical term is psychology. The non-technical term is FOMO.
Yeah. Mania.
Mania, yeah. Look, there's no doubt when people see friends, family, people on the internet making extraordinary amounts of money easily, supposedly easily, that they often feel like they should be involved and that they can do it too. And I guess it's within human nature somewhat to have that fear of missing out and want to jump in on the next best thing and try and make a quick buck or two. And there's no doubt that in some of these asset classes that we've spoken about, there's a lot of mania and FOMO going on. But it's also, in some of the more traditional asset classes, such as housing, there's elements of fear of missing out as well, and even stocks. So
yeah, I definitely think you're right. Like, FOMO is probably number one with a bullet. To appropriate Thomas from Comedian The Economist phrase, it's FOMO 1 and then daylight second. But I also think there's psychology in terms of the collective belief around what is investable is changing. And we're not here to say what people are right or wrong. Like, the fact of the matter is these alternative assets are getting these valuations, and, by virtue of getting these valuations, they are investable, if that makes sense. Whether they're a good investment or not is another discussion. But I think people have changed their mind about what is an asset, what can store value. And we saw it with things like sneakers. Gary Vee has been pushing things like baseball cards and Pokemon cards. We're seeing it with NFTs. It's just there's a psychological shift in terms of the array of assets you can put your money into. Like, this isn't your grandparents' 60% stocks, 40% bonds economy anymore. And I reckon some of these will get shaken out over time and they won't hold value. But it's just if enough people believe that something will hold value and that it is an asset class,
that's good enough.
It almost becomes an asset class.
Yeah. All right, so let's close this out with what does it actually mean for investors? There's many ways that you could look at this. It can become overwhelming to think about where to be putting your money, how to play the game with all of these new assets coming to market. Should you turn a blind eye and not worry about it? It's, I can understand that there'd be a lot of anxious investors out there and people just really concerned and unsure. As we spoke about on our AusBiz show a couple of weeks ago, it feels like there has never been a moment in our investing lifetime that there has been such a clear divide between what is going on in markets. There's inflation, there's no inflation. We're in a bubble, we're not in a bubble.
Yeah, the economy's strong, the economy's on a cliff.
Yeah. So wading through all of that can be very difficult.
Yeah.
So we want to just cover off a few ways in which we're approaching this and ways in which some of the experts are also approaching this.
I was going to say that in our notes for this section, we've both written the name of a world-renowned expert investor. So why don't you start with yours and then I'll get on to mine.
Sure. So Howard Marks, founder of Oak Tree Capital, he released a memo in which he sort of spoke about the divergence in markets at the moment and how you can see that we're certainly potentially characteristics of being in a bubble, but then on the same side, there's reasons for that to be occurring. So it might not be as, treacherous as some people have thought. But his overwhelming comment was to just proceed with caution. Don't go putting in everything all at once, but also sitting on the sidelines might be the worst thing you could be doing because you're going to lose out. He's not here to pick the top. He said he's had moments in time where he's been much more confident and say that, yes, we're nearing the top of a market, nearing the top, not picking the top. But he feels there are many reasons to say that it's not unusual to see what we're seeing now and just to absolutely proceed with caution.
Yeah. So Marx, in his memo, was very aware of the inflation risk. He was sort of like proceed with caution and be most cautious about inflation. And we touched on the reasons why inflation is a risk. What were some of the things he suggested people do and don't, investors do and don't do?
Well, with inflation as the context, he was pretty clear to steer away from long-dated fixed income investments.
Explain like I'm five.
Like bonds. Anything that is going to be locking in an interest rate now over a long period of time.
Yeah. Term deposits with a fixed rate, bonds with a fixed rate.
On the flip side of that, he suggested that floating rate debt might be an option. Again, I guess debt investments that aren't fixed in terms of their interest rate, and as interest rates move or inflation moves, then it will move accordingly.
Yeah.
So your return is adjusted accordingly, and you're not going to be locked into the return now.
One of the most popular asset classes of the last little while have been TIPS, Treasury Insurance Protected Securities, or something like that. But it's basically like you get inflation plus 2% or whatever,
floating.
Plus 4%. So as inflation goes up,
it adjusts
the
accordingly.
yield goes up. Yeah.
And as we mentioned as well, Howard Marks made note that real assets and assets that have pricing power that can adjust with inflation. So real assets, housing, REITs, which we mentioned earlier in this episode. And also, if you're thinking about what stocks to buy, you want to be looking at companies that have pricing power and are able to adjust their prices in line with inflation without suffering too much consequence on their business.
The proverbial toll bridge that's the only entrance into town that can just keep raising its prices.
So that's one way to think about it. Proceed with caution. Think about inflation and what assets you could be investing in. Ren, you want to speak about Seth Klarman?
Yeah, Seth Klarman. I'm a bit of a fanboy of Seth Klarman.
Yeah.
In his book, he writes about, in his book, Margin of Safety, he writes about, he asks the question, are you investing or are you speculating? And for me, that has never been a more relevant question to ask. So basically, the way he thinks about it is you're investing if you're buying something that is a productive asset. A company that makes something, generates revenue, a property that can generate rental income, a machine that creates widgets that you can sell. Like, you're investing if you're putting money into a productive asset that will generate cash flow. You're speculating if you're putting your money into something with the expectation that someone will pay a higher price in future. You're speculating if you're buying a Leonardo da Vinci painting for $450 million with the expectation that someone will pay $600 million in 10 years. You're speculating if you're buying a Mickey Mantle baseball card for $5 million with the expectation that someone will pay $7 million in 2 years. And for me, that is the most relevant question now. And I think like I love reading about this stuff. I'm baffled by some of it, but I'm not going to be putting my money in it. There are two exceptions in my mind where I've strayed from that path. I have some gold in my portfolio and I have some crypto in my portfolio, both small percentages of my portfolio, and I'm aware that I've strayed. But everything else, is this a productive asset, or and will it generate cash flow, or am I just expecting someone to pay more for the same thing in future?
Yeah. No, it's definitely a good way to think about it, and I guess if you think about it in that way, you're going to rule yourself out of many of these crazy situations that are going on.
And then, we were talking about like the NBA Top Shots, and like, do ESPN pay the owners of the NFT a licensing fee every time? If over time that's the ecosystem that develops, or like we do Equity Mates Top Shots, and then every time an ad plays on the Equity Mates episode that you own, you get that income, or maybe we split it.
Sure, definitely split it.
Then that conversation is different, because then it's an asset that generates cash flow, and then it becomes a question of valuation and like how much, what are the future cash flows of that asset, and like what's it worth today. But if you're just buying a digital highlight that doesn't generate cash flow, then you're speculating that someone will pay more for it in the future.
Yeah.
And so I think that's a really important distinction. And for me, it's never been a more relevant question.
Nice, Ren. Well, I think a closing comment for me as well is just to stick to your strategy here. It's so easy to go off. It's so easy to go off strategy and get carried away with the hype. If you think about the big picture here, and you look at what markets have done over the last 100 years, you look at the way that they certainly crash, there's no denying it. They get in bubbles, there's no denying it, but inevitably they recover and continue to grind up. If you just stick to your strategy of putting money in to assets or into investments that you generally believe are going to grow in value and compound over a long period of time, and think about, particularly if you're young, doing so at a consistent rate, then you don't need to worry about what's going on in the market right now and getting carried away with the hype and euphoria and feeling like you need to make $1 million overnight. You can do that over 40 years and still be as happy. Probably happier. Probably sleep a lot better.
Yeah. A lot less chance of it all going to zero.
Yes.
Now, they were the three key points we wanted to hit. What does it mean for investors? I want to add a fourth, not so much for investors, but for investment product producers. So this is a shout out to BetaShares, VanEck, State Street, BlackRock, and Vanguard in Australia, and ETF Securities. Who's going to be first to make the hype alternative assets ETF that holds sneakers, baseball cards, Pokemon cards, NFTs, and maybe like some art or something like that.
Could be Equity Mates.
Maybe some Dogecoin and some what was the cryptocurrency that Specky
Banana.
McGee? Banano? Yeah. There's got to be some money that wants to flow into that space.
Surely. Let's see what comes back.
I'm not saying that I would put any money in, but God, I'd love to make some content around it.
Well, Ren, that brings us to the end of our asset bubbles. Hopefully you guys have been able to take something from that will help you on your investing journey. There's certainly a lot going on, a lot to keep up with. I guess my message would be, don't feel like you need to be across it all, or just stay calm, stay cool and collected, and think about the bigger picture.
I think that's really important, and we didn't touch on it, but you know how we always say like cut out the noise and like what's important. Like this is the example of like, is this important? Yeah. Did we just spend an hour on an episode? Did everyone just listen to this? And our concluding thought was, well, you shouldn't be thinking about it.
Potentially, but anyway, look, you live and you learn. Just a reminder that if you do enjoy what we do and want us to continue, please rate and review the show. It does help us on the charts. It helps people who are discovering our podcast as well. So please go and rate and review Equity Mates a solid 5 stars. If it's not going to be 5, then please email us at contact@equitymates.com with your feedback, and we can take it up personally. That is fine. Also, a reminder that we have plenty of other podcasts in the Equity Mates Media Network. We've got You're in Good Company, hosted by Maddie and Sophie. We've got Meet, Pay, Love, hosted by Zoe and Carmel. Comedian v Economist, which we've referenced a few times here, hosted by Thomas and Adam. And also the Get Started Investing podcast with Ren and myself. Plenty going on in the Equity Mates community.
Of content.
Yeah, so love that you're supporting us and listening us. And Ren, it's always good to chat.
Yeah.
We'll pick it up next week.
Sounds good.
Equity Mates Investing podcast is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Equity Mates Investing podcast are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website, where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Equity Mates Investing podcast acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.